Well, welcome. Today, I'm so excited to introduce you to Rebekah Butler, Managing Partner of the Gratitude Railroad. I love that name. She serves as the co-CEO and jointly oversees all aspects of the growing business, including investments, business strategy, development, finance, and operations. Prior to Gratitude, Rebekah was co-executive director and chief investment officer of the Grove Foundation and MD of Grove Action Fund, a 501c4 social welfare organization. And prior to her work with the Grove organizations, Rebekah was a management consultant at Deloitte Consulting, and she started her career at the Guttmacher Institute in Washington, D.C., where she analyzed and advocated on reproductive health policy. And she earned a BA with distinction in sociology and Spanish from Stanford University and an MBA and MPH from UC Berkeley. She holds the Certified Investment Management Analyst certification administered by the Investments and Wealth Institute and taught in conjunction with the Yale School of Management. Welcome, Rebekah. It's so good to have you here. And I'm going to give, before you talk, I'm going to give one more key piece of things that you've done, because I think it puts in perspective some of the things that we're going to be talking about today. And that's how you led the transition of the Grove Foundation's $150 million portfolio to complete mission alignment and managing a programmatically aligned carve-out of $18 million, comprising 21 fund and direct investments. And obviously, you've led leadership roles across a whole wide range of organizations and initiatives, including currently on the board of the Sierra Club Foundation, where you're chair of the investment committee, and you serve on the executive and audit committees. So many things from, call it, nonprofit and foundation world to board world to your portfolio companies and making transitions. So there's a host of things to get to today, and I know we won't get to everything, but welcome, and thank you so much for spending your time and insights with everyone.
It's so fun to be here with you, Nadine. Thanks for having me.
One of the things that I found really interesting, and I was fortunate enough to attend a lunch a few months ago and hear from you and other folks involved with Gratitude Railroad, is how you support an investment community that learns and executes investments in early stage companies and funds that address social environmental issues without looking to have any kind of reduction in investment risks. That you have over 100 partners and LPs and a network of hundreds of collaborators who engage in that learning, networking, and investing, and how you syndicate direct investments in companies at the seed and Series A stage, and how you manage impact-focused funds. Like, there's so many people and so many things that you do. So maybe talk a little bit about, like, why is that so? Like, why is it important to have all of those pieces that you're putting together?
Yeah, great question. And it's what makes my job, frankly, so fun, that we do all those things. We're a pretty unique company. We consider ourselves a community-driven impact investing firm. And when I say that, I mean that we work together with a community of committed investors, and we facilitate learning and networking, and we also collaborate directly on investments and move capital together. So we create this iterative process between learning, and our team brings opportunities forward for investment. Often we do collaborative diligence sessions. And so our community of investors helps evaluate, vet, and anchor our investment opportunities. And as a team, we get to go back and do full diligence, focus on things like risk mitigation, portfolio construction, et cetera. But we have an unusual way of going back and forth between learning and collaborating and creating investment products and opportunities.
I think that's what struck me, because there's obviously a lot of groups that's like, throw your hat in the ring. So do you want to put in 10 grand, 20 grand, 100 grand, more than that into deals, right? And it can be social, educational, alike. But what I had learned, at least from the time that I'd spent with you and your team, is how involved the diligence process is. And so maybe you can share a little bit about that, what I think is more unique in an organization such as yours versus other ones that people might belong to, that might be, I guess, maybe less rigorous, if I can name it that way.
Yeah, so just to be clear on it one more time. So we have community building events we do, and then we have two other lines of business. We syndicate investments directly into early stage companies that have a dual mission, that have a dual quality of compelling financial returns and authentic impact. And then we also stand up and manage funds. Yeah. So let me talk for a minute about the syndication process. because it might really illustrate that question that you're asking. So for our direct company investments, our team manages deal flow. We have lots of inbound deal flow, and we have weekly meetings, and we identify opportunities that we think are really compelling. And then periodically, our investors all get on a Zoom or sometimes in person, and we present opportunities to the investors. And they actually will often get to meet or hear directly from company founders, ask questions, and talk to one another about the opportunity. And then we gauge the level of interest. And if there's sufficient interest, we'll go back and do full diligence and then bring the process forward, setting up an SPV and circling up the money as a single investor. So over time, our investors have a portfolio of company investments that are in line with their own interests, with our team providing a lot of the back end work.
I think that's helpful to note. And maybe you can give a few examples of investments that you've made, and how did they fit into your sweet spot of what you're looking for?
Sure, yeah. So one example, we recently invested in a company called Blue Ocean Gear. It's a female-led company, which 2/3 of our companies are actually led by women, of our large portfolio of companies. It's a smart ocean buoy system that helps fisher people find and retrieve lost fishing gear. So this is good for the business of the fisher people because they are able to retrieve their equipment and not lose the money of having lost their equipment. It also removes fishing gear from oceans, which is a major source of plastic in the ocean. And the buoy is a smart buoy, and it collects data on ocean health that can be used by the scientific community. So there's several elements to the impact, and we thought the potential in the marketplace was also really compelling. I can give you one more example if you like.
Yeah, I think it's helpful because I know that there's so many different, if you want to call it sectors or industries that your team is interested in. So I think it helps provide a bigger picture for people.
Sure. So one that we're currently evaluating is a fund that would support small businesses to transition to employee ownership. So a lot of small or medium businesses get to a stage, right, where the owners want to exit, and they look at their options, and maybe they don't want to be acquired by a large company, or they don't want to go through a private equity process. And this provides an alternative path. And at the same time, it creates employee ownership, which allows the employees to participate in the value creation of the business, which is good for reducing the wealth gap and providing new opportunities.
And, one of the things that I found interesting, when hearing about some of the portfolio companies you have, obviously ideas and ones that you're looking at now, is sourcing. So you had mentioned a little bit about you do get a lot of inbound. But maybe talk a little bit about how do you find potential investments or partners to work with here to help solve the issues that you're most interested, or those topics, those segments that you're most interested in? Are you going to conferences? Are you actively, asking your portfolio companies for other companies or entrepreneurs they know? Is it, maybe talk a little bit about the sourcing process.
Yeah, all of the above. So our team is active and out there, and we go to conferences and read a lot and pay attention. But I'll focus on what I think are the largest sources of inbound opportunities. So one is our investor network. So you mentioned we have about 200 partner investors and LPs in our network. And so those folks send us a lot of opportunities. We also have relationships with deal flow partners who we talk to regularly. So we know there's other organizations and companies and people in the space that also actively invest in the impact space or along different sectors or with a racial or gender lens like we do. And so we proactively meet with those individuals and those companies and exchange ideas and talk about what we're working on. Those are probably the two primary ways that we do it. We also do take inbound inquiries because we want to be open and inclusive in our approach to how we evaluate opportunities.
And then if we might kind of flip the script to the other side of what you do, and that is the community, the network of people that you have. Maybe explain to people a little bit about, how are people finding you? What type of person is probably most interested in what you're doing? Maybe the makeup, not to say that today is what it'll be in the future, right? But just kind of like, what are people, who are you attracting? What do they get out of it? give the pitch for folks who are saying, hey, this is interesting to me. Should I become a member?
Yeah, so we primarily work with ultra high net worth individuals, family offices and foundations. We also work with some multi-family offices and registered investment advisors, and folks have different reasons for engaging. We do tend to have people in our network who are either interested in investing or were entrepreneurs themselves or somehow engaged in wealth management and kind of like the investment process. We welcome people in who have no experience with impact investing, and we love working with folks who are deep in impact investing. I would say we have a range on that front. And we allow different opportunities for people to participate. Some folks in our network love the deal by deal evaluation. They love data rooms. They like to read memos and look at financial models, and they get into it and they like to evaluate it. We've also had other folks that doesn't work as well for them, and they prefer a fund approach, which is why we also have stand up and manage funds, so that can be more attractive to people who maybe don't want to get into individual opportunities, but want to have some exposure to the kinds of businesses that we're supporting.
And separate from deciding on investments or learning about investments, what other type of education, networking, community building do you do with your base?
We offer a wide range, both in person, which is really fun to be doing again, and online. So on the in-person front, one of our favorite things to do is take people to visit a portfolio company and see what that's like and get to meet the founder and maybe see the machine or the setting that the company is operating in. And then often we'll add a meal or something. So there's always a social element because our folks really like to talk to and meet and engage with each other. As with all network kind of organizations, we facilitate a certain part of the conversation, and then a lot of it takes on a life of its own, and people form their own relationships and do their own deals too, and that's a really beautiful thing. So we like to pair content with opportunity to network and talk. We also do dinners, regional dinners. We do webinars on different topics. Sometimes we will have events where we showcase or allow a bunch of different fund managers to present. And we have an annual conference that's our flagship event. And I just want to say that the work we do around community and education is not just about our investment opportunities. Our goal is really to expose people to the broader impact space and to get a window into, hey, if I'm interested in public equity strategies and impact, here's some ways that can go. If I'm interested, like maybe I need to deal with my banking relationship, or I'm interested in international development, or whatever the interest may be, we want people to see that there's a whole range of things you can do with your assets outside of what we focus on, which is really early stage private investing.
And obviously the scope is broad, the network is broad. What you're doing in investments has a lot of layers of impact here and return. How did you go about, or maybe tell the story of Gratitude Railroad? How did it start, such that like the need that you're fulfilling and, the genesis of that, and maybe a little bit about the transition of the organization over the last few years?
Sure. It was actually founded by a couple of men who, one had been a hedge fund manager and one was a successful entrepreneur, and they met at a leadership program. And they got really excited about focusing the next period of their lives on using capitalism as a force for good and resourcing companies for the future. And they started initially convening their friends to talk about this and to get excited about some specific opportunities. That was actually a decade ago. So Gratitude Railroad we're celebrating our 10-year anniversary. As time went on, they hired staff. They hired Thomas Knowles, who's my co-CEO, and he started to set up the LLC and more build a business around it. Over the last 3 to 4 years, we've really done additional work to take the company to the next level. And I should say, I was on the advisory board for 3 years before I joined. So I can speak actively to that part of the history. And I would say there's really 3 aspects of the work that we've been working intensely on. One is building out the team, which we have a fantastic team of 7 full-time staff now. Continuing to develop our investment thesis and process. really professionalizing and getting the rigor down around that. And then the third is, which is a pretty cool thing we're doing, is deciding that our strategy is not only has to do with what we invest in, but also how we operate as a company. And we've recently gone through a process of transitioning our governance from a more traditional 5-person original investor board to a board of 10 folks with wide-ranging, really incredible experience that is now acting as the governing board, working in a committee structure in partnership with staff. And we are creating avenues to also expand our cap table for our board members who were not investors, and also increasingly for our employees. So we think we're leveraging a lot more diversity, a lot more perspectives. We've also added investment committee members and investment partners, so that when we think about our team, it's this very broad, diverse, very seasoned, and wide-ranging set of experiences that we bring to the table.
I think that's helpful to note, right? Just the genesis of where you've come, where you are now, and there's so many exciting things on your plate. One of the things that, you know, that was mentioned, I think, during our lunch and then in some of the notes of prep before our call today, is about diversity in the industry. And it could be female diversity, a broader definition of diversity. Obviously, in terms of the portfolio companies you have, you show it. In terms of your employee base, you're showing it. Now, you call it your board, or those having an impact at the higher level of your organization. But are you finding ways, you know, it's near to my heart. I've spent, you know, over almost 30 years trying to affect change, and it's slow going. I think it's better in the private area than the public area. But maybe are you finding any solutions, or you're finding any key drivers or leverage points that your organization, what not inside, but maybe outside, can have a greater impact? Or, you know, is it still kind of trying to figure out what those are at this stage of the game?
Yeah, so I think, you know, team is a big part of it. So having a diverse team ourselves and this much broader team that I referenced certainly helps us to have different kind of deal flow, different kind of experience, see different kinds of opportunities. I do think that's really important. And so we have built that internally. And I don't know, I was debating, are we really doing better in the private sector than the public sector?
Unfortunately, you are. I hate to break it to you, but you are. Because there's capital for the cause, whereas, and it's been growing. But on the flip side, it's been shrinking for like the past decade on the public side. And some of the players who used to actually allocate with that, it's gone by the wayside. Although I must say, on a recent conference out here, and you can probably name what it is, with big pensions, I think they just pulled some of the private funding for diverse managers. So it's not to say that it doesn't happen in that segment as well. But yeah.
Yeah, so can I speak to that a little bit more?
Sure.
Yes. So a couple things. One is that we have been fairly successful given that we focus on venture. So I mentioned previously, we have a portfolio of 30 portfolio companies. 2/3 are led by women and 1/3 are led by people of color. We've had a long commitment to resourcing and investing in underrepresented founders. And we do that because it's the right thing to do, but also it's an incredible business opportunity. We focus on folks who are deeply understand the issues they're working with, that have lived experience. And we take into account really what is relevant about the experience, not always sticking to the most traditional ways of thinking about that. And on the fund manager side, I think there's tremendous opportunity. I mean, I think less than 5% of venture capital goes to women, and even fewer less than that to women of color. So that's a really big opportunity. And we know that women outperform, right? There's so much data, or that the performance is great. Diverse teams outperform. Sure. Venture firms that have female leadership are in the top quartile. First-time funds also tend to outperform later funds. So we have a lot of data. So we know there's this huge gap between where capital is going and where the opportunities are. And we have a whole strategy around resourcing underrepresented fund managers in the impact space. It's pretty compelling, and we're really excited about it.
And just so folks know, in case they're running a business and they want to, run it by the railroad, when you think about the target, whether it's size, it might be size of revenue, profits, other type of metrics. What exactly would you say are you looking for so that people use your time wisely in coming to you?
Yeah, so we focus on seed or Series A primarily. We like to see around $500,000 of annual revenue. We have seven sectors, but briefly, they're in climate, health and well-being, food systems, and education. And we do pay attention to the team and the direct experience the team has with the product and service. And in terms of how we evaluate both for the compelling financial opportunity and the potential for enduring impact. Usually looking at products and services potential for impact, but also how the company operates and the team's commitment and experience matter a lot too.
Great. And looking forward, I mean, you mentioned one of the businesses that you're currently reviewing. What are you most excited about, either for the organization or initiatives that you're putting forth over the next couple of years?
Just really excited. I feel like we're poised to grow. We have a great team. I'm excited about how we've evolved our governing structure. I love that we're working in a different way. The venture space has been through a big realignment, which was really painful for a lot of people. I think we're coming out of that, and it's a great opportunity to be in venture right now. The impact space is also growing. And as I mentioned, not enough resources are going to these underrepresented founders and managers, and we love that we've been doing that and just see so much potential to grow.
And one of the other things I like to talk to people about, because you've been in the business for a while now, is just the risks and lessons learned, right? Because unfortunately, we're not all perfect. So we have elements of challenges that we've been through, and they do help shape us in a good way going forward. So is there any kind of lesson learned or challenge that you had that you could share with folks so that they could benefit from your knowledge?
I mean, we have a two-part way of assessing risk. I would say partly traditional and partly impact specific. So the traditional part is that we evaluate typical early stage company risk, technical risk, market risk, team risk, regulatory risk, the drill. And we try to assess to what degree that's mitigated by other factors. I mean, look, we know early stage investing almost always has significant financial risk. So our goal is to be clear-eyed about what the drivers of the risk are, to make good assessments about that, and to be transparent about them, and to ensure there's good potential upside. And I don't know that that's really rocket science or something radically different than what other folks are doing, but being very rigorous and consistent about how we look at that, which we have through a scorecard and a multifaceted diligence process that we go through. And then if I can speak for a minute to the impact risk. So that's like the risk that the company will not actually successfully address a social or environmental problem. And to some degree, that's tied up in the business success, right? Yes, if business goes out of business.
Right. If business doesn't work, we're not going to help anybody, right?
Yeah, I mean, you can still have an impact. You can still open up a new market or change something about an industry, but you're not going to be directly successful over time. But so for impact risk, we look at the degree to which the product or service itself is addressing something systemic or significant. So a lot of what folks think of in the impact space is like, oh, maybe you're like making some donations, or there's something about your operations that's a little different. We try to go upstream and make sure it's really addressing a problem. And we can also provide some value around that to companies because we specialize in impact. We often can advise founders and fund managers about how to think of their impact and how to get some durability to their impact planning really early on, so it's stickier.
That's great. And anything else you'd like to share with folks that to get to either know you or your firm or areas that you're working on so that they can follow up?
I would just say that it's so fun working with a community and doing investment in a collaborative way. I worked as a CIO where I did a lot of diligence on my own. And part of why I wanted to come to this company is because you learn more and you have more fun and you get more done when you link arms with folks. And our goal is really to welcome people into impact investing who might be curious or want to go deeper, and make it an engaging and fun process and where we actually move capital. And I just really welcome folks into our movement. It's a total blast.
And what's the best way that people can reach out to you or the organization? We'll end on that positive note so that people can make sure that they can reach out.
Yeah, I'm Rebekah Saul Butler, rsbutler@gratituderailroad.com. You can send me an email.
Awesome. Thank you so much for sharing your time and insights. And we look forward to watching the organization grow and hearing more in short order from you and the team.
Thanks so much, Nadine. This was a lot of fun.